Before the market moves in any particular direction significantly, we must trigger liquidity. And in this video, we are going to look at how the market triggers liquidity first before going in any particular direction. If you're new to the channel, subscribe. Let's do this. Alright, so yesterday we got two beautiful setups, one from AUD/NSD. Now, the process is very simple. We use the weekly cycle to tell us where the market is headed. And if we look at the weekly cycle, we see that we have a failed breakout that occurred last week on Thursday, giving us a sell bias going to Friday and Monday. And now you can see clearly that Friday we got a beautiful sell, and Monday we were looking for an opportunity to sell. However, when we come to the screen on Monday, we need to know exactly where the market triggers liquidity. And in our case, it's the high and the low of the day. So coming to the screen in my timing window for the London session is 3 to 5 a.m. New York time. So if we can draw our line to show that, then it makes it so clear to know exactly where the market triggers liquidity. So prior to the window open at 3 a.m., I am looking for the high and the low of the day. So the high and the low of the day is the highest and the lowest point price has reached before that timing window. So this is the low of the day. The high of the day is actually at 245 because that is the last time. Now, once we have the high and the low of the day in place, this is where the liquidity comes into play. So, and so here's the thing. We need to trigger prices above the high of the day. And this pin actually triggered that. Now, sometimes it can be a pin, sometimes it can be a breakout. The point is to trigger liquidity, trigger other time frame traders into the market. Now, once we have that triggered, now we can go to the 1 minute time frame. Now, on the 1 minute time frame, we are looking for trapped volume. Now, trapped volume can occur in many different ways. For me, I am looking for a specific type of pattern, the head and shoulders pattern. Now, keep in mind that the head and shoulders pattern occurs every time, every single day. However, we need to look for those high quality setups. Number one is, if you look at the distance before the head and shoulders pattern formed, it needs to be significant, at least 1 to 2 if you are to get into that trade. And so the distance we are talking about is this. So it's the pump that occurs before the head and shoulders pattern occurred, this movement here. And then now the second thing is that the head and shoulders pattern needs to take its time. So for me, I am looking for patterns that take 30 minutes and above to form. And so we can look at this pattern. It started occurring at 2:52 and we got our breakout at 3:46, which is almost an hour, give or take. So we already have triggered liquidity. We already have a head and shoulders pattern. And once price breaks that level, so once price breaks this neckline, that's my entry. My stops are a few pips above the right shoulder, and I am targeting a risk-reward ratio of 1:2. And that is how that trade played out yesterday. And that is how right now I use the liquidity grab at the high or the low of the day to identify high quality setups that have a potential to give me a nice move. And if you are interested in one-on-one mentorship, check the link in the description. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.